Welcome to another stage analysis video. It's Sunday the 4th of May 2025. I'm going to start this weekend's video with a look at what the major indexes are doing as we're coming to what's known as a pivotal point as the market rebounds back towards its 200-day moving averages in multiple indexes, S&P 500 and the Nasdaq 100 being closer, for example. So let's start off with the S&P 500 here, which has rallied back now for the last 4 weeks. You see on the weekly chart here, it remains in stage 4 at the moment, what we call stage 4 minus, as it's just closed back above its 10-week moving average. So stage 4 minus and stage 4B minus are the same type of thing. Stage 4B minus just means it's been in stage 4 for longer. So this is only a fledgling stage 4 move still. We've had this V-type bottom off of the lows here, which rallied back up so far over 17% in the S&P 500. And as you can see, approaching the 40-week moving average and the 30-week moving average here, but still below both of them currently, but just getting back above the getting very close to the stage 4 level at the moment. You can see at the bottom here the combined percentages of stocks above their 50-day, 150 and 200-day moving averages, which encapsulates the entire NYSE and Nasdaq composites. So it's around 5,000 or so stocks. So this is currently around 37% and has moved back above its own moving averages. So a little bit of a short-term signal on that one coming out of the lows is when it gets into the lower zone and starts rebounding, particularly back through the key 30% level and back above its moving averages here. That's when we start to really take notice of this. But as we said, we're approaching some key overhead resistance. If you look on we did it on trading view, I'm on stock charts at the moment so I can't do it, but the anchored VWAP for the year to date is also coming up in a similar area here at the moment, close to the 200-day moving average. If we look at the daily chart of this, you can see it started to have a change of character. We had the tariff pause day announcement here where we had the strong, a day-free follow-through attempt, and I think it finally happened on day 11 with the cancelling follow-through day. But from a breadth perspective, this is where it started to break back out again on the 20 days. So down here was our day from a breadth perspective. So we saw a real strong move through on the day following that as well in the market breadth. So at the moment, 2 days of closes back above the 50-day moving average, but still below the 200-day moving average, still below, obviously, overhead resistance. From a stage analysis perspective, at the moment, the next stage 2 level is all the way up here. So this high, closing high on a weekly basis of 6,114.63. But if we count back, we use a 13-week or quarterly approach with the 200-day moving average as a way of determining where the level is as it changes over time. So that's not a strict level, and we'll start to come off. So at the moment, from we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 13 weeks is back here at the moment. So this is the highest level currently. So in 3 weeks' time, it will start to drop down and then drop down further. So if it does get below the 200-day moving average, then we use a 1% guide above that as well. So within the next 4 weeks here, we could potentially be as low as the 5,800 area. But if we go into the daily, so the stage 2 level could drop all the way back down to this area. But at the moment, it's all the way up in the highs around that 6,100 area there we just highlighted. On a short-term basis, you can see the percentage of stocks above their 20-day moving average is in the upper zone here, 86.6% of S&P 500 stocks above their 1 month average here. So getting a little bit frothy on the upside here. The best areas, as we said, when they're coming out of the lower zone, these are the points where it's best to start to get engaged with these, as it's been in the lower zone for a little bit and starts to move back out again. So overhead resistance to deal with on the S&P 500, but above its 180R level. If we look at the Nasdaq, you can see we've got 51% of stocks above their 200-day moving average at the moment. So very neutral position here as we approach the 40-week and 30-week moving averages. Again, above the 10-week moving average. So changed status last week to stage 4 minus here. Again, stage 2 levels all the way up here around that 22,000 area, but with the same week count as the S&P 500. So within the next 3 weeks or so, it will be all the way down to this level here. So we are actually within the next month, by the early part of June, the stage 2 level will be significantly lower here. But where are we? Daily chart with the Nasdaq 100, we're sitting right on the 200-day moving average, and clearly a very pivotal point for this. It's 2022, it did on the second attempt at the 200-day moving average roll over and continue off down towards the lows. Doesn't necessarily mean that's going to happen in other years, in other stage 4 declines. Each one has its own characteristics. Sometimes it's made it through, pushed back up towards the highs. Sometimes it's rolled over here. So you never know what's going to happen. All we can do is react to the price action and what we're seeing on a daily basis here. So it's above its plus 180R level, extended quite extremely on that in the short term here, 93%. So some cooling off within this 50-day and 200-day moving average range would be healthy. We kept the percentage of stocks in the upper zone, but getting them less extended in the near term there, that would be the ideal, given the 21-day chance to catch up and the 50-day to cross. So somewhere in this area could be a more interesting spot if you're looking to get involved here. We go back to the weekly chart on the Nasdaq 100. So the 2022 last one that's fresh in people's memories, where it carried on rolling over, rebounded a few times, spiked off down. The stage 4 was quite a deep decline, but other times we have seen 2019 etc. there have been times where it's rallied back up towards the highs, then found some support and came back off again before rallying off to, again, another more bullish scenario could be that it would make it back above the highs, rebound, start to build and carry on over. So no one knows what's going to happen, whether we can continue on the stage 4 decline or it's going to move back into here and make a new stage 2 attempt, ultimately fail at the highs and roll over again. So you never know what's going to happen here, but it is, as we said, with the key moving averages in play here, we are at what we call a pivotal point. So it's certainly going to be an interesting few weeks coming up now. We look at the Russell, much further below, so much weaker, only 24.83% of stocks above their 200-day moving average. So you want to see that start to get back out of the lower zone here. Again, back above its 10-week moving average, but a long way below its 40-week and 30-week moving averages and the 200-day, etc. So still got another 7-8% to go in order to get back there and adjust back to its stage 4 level. So significantly underperforming still, but it did get back above its 180R level on a daily basis and managed 1 day of closes above the 50-day moving average. Percentage of stocks at 86.83% at the moment. So improvement across the board, but certainly the most strength in the Nasdaq 100 there at the moment, followed by the S&P and then the smaller caps lagging, but also improving. So VIX has continued to decline here. We're getting back towards the key 200-day moving average. If it gets back to the other side of that, then it'll be a much calmer environment. But at the moment, volatility is still high, even though this is declining. So we want to see that get back below the 200-day in order to be more positive. But if we do start to see some spikes back the other way, starts breaking through some near-term highs, then that would be a point of concern.